And good morning. It's Mary Ellen McGonagle, and you're watching the MEM Edge show. And this is the show where we put you in front of where the action is in the markets. And certainly today, we are seeing quite a bit of positive bullish action in the markets. And let's go ahead and get started. Take a look at what we are going to be reviewing today. As usual, first, we're going to go ahead and take a look at where we are, what are the current markets showing us, and this will help you create a game plan, certainly for this week and going forward, even beyond that. And from there, we're going to go ahead and show you how you can use StockCharts.com to help you uncover pockets of strength. And from my work, that is what a lot of my searching is all about. I'm looking for where those pockets of strength are, where you can capitalize on them, and then from there outperform the broader markets. And from there we can go ahead and take a look at, we're not going to spend a lot of time because of where we are in the markets, but I'm all about balancing. A lot of the work I do is looking at high growth, fast moving stocks. You want to have a little bit of a balance there. So we're going to look at how you can uncover positive stocks within groups that are generally viewed as defensive. And from there, we are still in earnings season. Over 90% of the S&P 500 stocks have reported, but we do still have a fairly robust earnings calendar for this week. So we'll take a look at some of the bright spots there of stocks that are due to report. And then last, of course, it's all about China, and we've seen certainly a bit of a turn. We'll go ahead and look at the Chinese stock market, but there are some stocks in particular that we can look at that for those of you that are inclined to trade outside of the US, these are going to be ADRs. They are Chinese-based stocks, but they trade on the US market. So we'll take a look at some of those stocks that are really popping here, given the current market's dynamics. So here we are. We're going to, as usual, I do want to take a minute and look at the broader market. So the first item we are looking at here is a daily price chart of the S&P 500. And I've marked it up a bit here. What I wanted to point out to you are a couple of things that are going on here more recently. And the first is, of course, today we're seeing that nice gap up here. And bigger picture, pulling out, we can see that the broader markets broke above that 200-day simple moving average. That's about a week and a half ago. This was, for those of you that follow this show, will know that this was an area of possible upside resistance. We had this nice reversal here at the end of December. This was your very first hurdle. This was the second. We've been able to overcome and are now above that 200-day simple moving average, which is quite bullish. Now we need to pay attention to these prior highs. These are going to be your next areas. And as we continue to advance, of course, eventually, ideally breaking out to new highs, then we are even in a better, even more bullish position. But let's take a look at some of the other indicators that I've gone ahead and overlaid on top of this chart. And the first is this green line. That's a 10-day simple moving average. The red line is your 50-day. And then the blue is, of course, we talked about that 200-day simple moving average. The relevance here is you can see with this 10-day how it really acts as support while this market is in this current uptrend. So now we have the 10-day up through the 200. So a lot of bullish action occurring around that. On top here, I have what's called an RSI. That's a relative strength indicator. We want to pay attention not only to the slope of this indicator, but to the position relative to this 50. That's your net neutral. So what we can see here is that the RSI is trending above neutral, positive, trending upward. But take a look at the position at 70. Your RSI is what is called overbought. We can see today it's trading at about 72. That's something that you can see here quite clearly on StockCharts.com, very helpful, telling us that the RSI is now in what's called an overbought position. Now it can remain here, but I will take you back here historically to other bullish periods back in 2018, and we can see that very rarely, this is only taking us back to April of last year, but we are most definitely in an overbought position, pointing that out with an eye toward keeping an eye out for a potential pullback, which while it would maybe a little painful, it would certainly be super healthy if that were to occur. Now down here we have what are called stochastics, another momentum indicator. And again, the position of this is going to be quite important. I block this out, but we are up here. Again, this is an indicator that's also telling us that the markets are in an overbought position. Again, you can see it can remain there for some time. It's not overly concerning, but you do want to be on the lookout at some point for a potential downtrend reversal. I would take you back to this June period when the stochastics not only turned down, they went below this net neutral in line with a bit of a minor pullback in the broader market. So we can see that the markets are certainly in an uptrend. We are in a very bullish position. However, again, just a little bit of a cautionary eye toward these overbought indicators. So let's go ahead and take a look at another view as far as the broader markets and drill down into some of the industry groupings. This is the candle glance view, accessible on that first page interface on StockCharts.com. So what I've done here is gone ahead and populated the candle glance chart. You can actually, down here, you can enter your symbols and decide what you would like to view in order to give you a snapshot, really clear-cut picture of where the strength is in the market. So what I've done here, you can see I have some different indices, the Russell 2000, interspersed with some of the ETFs that are sector related. I've gone ahead, overlaid the RSI, that relative strength indicator. I want to see where the strength is, and then sorted it in descending. So over here, it is going to exhibit and show us where the strongest either index or ETF sector is. And the first we can see here is the Russell 2000. Small cap stocks really have been on a tear. I'll tell you, over going for this month of February, the Russell 2000 has more than doubled as far as versus the S&P 500 on a performance basis. So we're seeing a nice uptick here in small cap stocks. That is actually quite bullish for the markets because a lot of these smaller priced, lower priced, smaller cap stocks are going to be a bit riskier. They have a lot in the way of upside, but their downside is there as well. So to see a move into small cap stocks is showing strength, that there's confidence. Investors are confident in this market, so they are going into these smaller stocks. From there, we can see that XLI, that is industrials. So that may be to think that we are in a very bullish period and that industrials, these are cyclical stocks. They are now leading, but a lot of that has to do with aerospace and defense stocks within, but we can take a look at how you can uncover that. But technology is really doing well. A lot of growth areas in technology. We can see the Dow. The Dow had a very good week last week, very as far as the underlying stocks within the Dow, it's very widespread and broad-based. So that is another good sign. The S&P, followed by the NASDAQ. And utility stocks doing surprisingly well. They are dropping a bit today, but this is one of those areas where you can take a peek and get into some of the potentially more defensive. A lot of these stocks, the average yield of utility stocks is 3.3%, and that is a very, very nice yield as you compare it relative to the down here. I have what's called the 10-year Treasury yield, and we can see that it's hovering right about that 2.65. And so you can look at a utility stocks at 3.3% and see that you are getting a higher yield, certainly, but also the underlying stocks are really performing quite well. So the other defensive area that is up here in the forefront is these real estate stocks, real estate investment trust stocks, another high yielding area of the markets, but also on a relative basis, really performing quite nicely. So let's go ahead and take a look. I talked about different items that we would like to get to today. The first is how you can uncover pockets of strength in the markets. And the first area that I am going to go ahead and take you to is, let's just go ahead to the StockCharts.com, this first page. So what I want to do is point out to you areas here that will tell you on a daily basis. Let's take a look at today's action. Given the bullishness, where is the strength with an eye toward capturing that strength potentially going forward? So what I'm going to do here is go ahead and take us to what's called the market summary. And this is a wonderful page because what it does is it provides you with an overview of the broader market. So it's taking into account today's action so we can see really quite clearly where the strength is in these broader markets. So let's go ahead and drill down, because what I want to do is get into the sectors and see what is moving today, and we can see it's rather mixed as far as the picture. I talked about technology stocks coming in, and we are seeing almost 1% advance. But quite interestingly, we can see that financials are really rallying today, 1.2%. And from my work, that's not really intuitive. You see a nice big bounce in the broader markets, and you wouldn't think that it would be financials. So let's go ahead and take a look at how from there you can drill down and get a feel for within the financials, where is that strength. So let's go ahead to this beginning initial page here. And what I'm going to do is take you to an area that is going to show us where the strength is within the financials. So here we are at that initial page again, and what I'm going to do from here is go ahead and drill down to the sector summary. And from here, we're going to take a look at the financials. So this is a great tool because there's an interface here. I'm going to go ahead and click onto that financial sector tab. And initially, it tells us, ranks it today, strength, where the strength is. So we can see investment services are up quite nicely today. Banks are rallying. That's always a good sign. So let's go ahead and take a look within investment services to see if there are any pockets of strength that potentially you could take advantage of. So we have different ways that you can sort it. Initially, it is going to be sorted by performance, but I like to look at this scooter, and that is called the StockCharts technical rating. And it's a wonderful tool because it really provides you with this ranking. The higher, the better. And these are going to be your more technically sound, better performers relative to their peers, ranked by this scooter. So what we can do from here is go ahead and hover over that ticker symbol, and you can see that where these stocks are. It's giving you a nice thumbnail shot view of some of these stocks that are picking up. So we can see that small cap stocks are really up in the forefront. We talked about the Russell 2000 being an outperformer. So again, from there, a lot of these stocks are already hitting a new high in price. So perhaps we can take a look at this HLNE as an example of a smaller cap stock that is potentially starting to turn. So go ahead and click onto this ticker symbol. What we're looking at here now is a daily price chart of a company. It's called Hamilton Lane, and technically it's looking really quite interesting. We can see relative to the broader markets that this particular stock fell out of bed prior back here in August, but now more recently, technically, we appear to have reversed this downtrend. So what we can look at, a lot of times you'll see these gaps up in the initial phases of a potential downtrend reversal. And oftentimes that is going to be earnings related. The company comes out, earnings are going to be your primary biggest driver of a stock's upward move. So taking that into account, we can see that the stock has advanced really quite nicely since then. So what I've done here is those same simple moving averages. Talked about the stock when it breaks up above that 200-day simple moving average, then the stock is freer to advance, if you will. Now, the stock is overbought. We talked about that RSI getting up above 70. So that is with an eye toward at some point in anticipation that you may see a pullback. Down on the lower portion here, I have what's called a MACD, a moving average convergence divergence. So in identifying this downtrend reversal, you want to look for that crossover, the black line up through the red. We got that in the beginning of February. You're up above 0, so you're in positive territory, and you're heading north. Other indicators you can use are, for instance, this is that 10-day simple moving average. We can see how it is acting as support, but quite simply right now, the stock is definitely a bit advanced. It's above well above this 10-day simple moving average. Not scientific, but it is something that historically you would anticipate perhaps a potential pullback. So that is a wonderful way on a daily basis to not only get a sense of where the strength is, but then to drill down and take a look at some individual stocks. Let's go ahead and move on. I talked about reviewing stocks that are due to report earnings this week. So what I'm going to do is go ahead and highlight some of the larger cap stocks that are due to report. The first one that we are looking at here is Home Depot. Let me go ahead and expand this chart for you so you can get a better view. And so we're looking at a daily price chart of Home Depot. And really what's happening this week is a lot of retail, consumer discretionary, consumer related stocks are due to report. And that's generally how the earnings season progresses. Toward the end is when a lot of these retailers start to come out with their numbers. So let's take a look at this stock. Initially, we can take a look at it technically. We talked about these downtrend reversals. Home Depot right in line with the broader markets. December 24th hit that low. However, the stock really has been languishing. It has not been participating with the broader markets. It's not showing that relative strength that we like to see. However, more recently, over the last 5 days, it's really been forming a very tight base, this back and fill here with an eye and anticipation toward their earnings release, which will be tomorrow. So what we want to take a look at here is the fact that the stock is above that 200-day simple moving average. So it is in a bullish period. It is at a point where it could benefit should the stock come in with earnings that are ahead of estimates. Let's take a look at another big retailer that reported a little over a week ago. This is Walmart, and more as an example. So this particular stock was a bit extended. This is the day before they reported, and the stock did gap up, but since then it has pulled back to that 10-day simple moving average. So when you compare that to a Home Depot that really has been marking time, it's not too outside of the box and advanced, so that again, it is in a position to benefit should they come in with some good numbers. Let's take a look at another stock that's going to be reporting this week. This is Lending Tree. This is a company that started out primarily in the mortgage business, but they've really grown and expanded their business. And so what I wanted to point out to you with this particular stock, they are due to report tomorrow. And we can see, again, this is really how powerful this 10-day simple moving average can be. So the stock is very constructive and bullish in the sense that that RSI is up here above that net neutral. bouncing around that overbought, but still in positive territory. This is that MACD. We had that positive crossover back here in line with the downtrend reversal. But overall, the stock is in a very bullish position. I'm going to pull up a weekly chart to give you a bit more in the way of a longer term kind of zooming out here. A lot of the work I do, I'm looking for stocks that are emerging out of bases. So we can see that this stock not only is poised to potentially hit a new high in price, at that time, it would indeed be breaking out of that base, which would be a very bullish occurrence. We can go back here to other time periods when the stock has broken out of the base and then advanced out. RSI up above 50, trending upward, and then your MACD just turned positive here in the beginning of the year. So there definitely appears to be more upside. A lot of what I like to do is take a look at some of the other stocks within this industry group. This is finance, mortgage related. They do a lot with debt relief and providing credit. So what we can do is take a look at some of the other stocks within this particular group that has already reported to give you a sense of, is it in a robust area of the markets? And this is PFSI, PennyMac Financial. They're big in the mortgage space. And we're looking at a weekly price chart. They reported their earnings recently, and we can see the nice advance that the stock has had subsequent to that release. They released right in here and have since continued to advance. The stock is poised to break out of a long-term base in a bullish fashion. Another competitor of LendingTree is a company called HFF, a little bit smaller, but we can take a look at their daily price chart to give you a sense. This is their gap up. They reported on Friday. The stock gapped up. So just to give you a sense again, or a feel of how some of the other stocks that are in the mortgage and financial related space are doing. This is ESNT. Another company came out with strong earnings and gapped up. Let's take a look at one other earnings. Actually, we can do a couple of more. We're doing great on time. So let's take a look at a software stock that is due to report this week. And the company is ticker symbol WDAY. It's Workday. And what I did want to point out here, I'm going to go ahead and pull up a weekly on this one. But for those of you that follow the markets super closely, you may know that a lot of software stocks have really been, they've actually been the leading sub-industry group within technology. So it's been a very, very strong area. This company is due to report their earnings on Thursday. So we are looking at a weekly chart. What I did want to share with you is the fact that the earnings estimates going into their report are very positive. Analysts have been revising estimates higher, and historically that is a bullish sign going into earnings. But what I did want to point out here on the weekly is the stock is just now getting into that overbought position. I talked about coming up above that 70. So in essence, we can go back historically to other periods when that occurred. The stock is what I would call priced for perfection. So when you see these stocks that are having these big advances going into earnings, the potential advance out of that is not going to be as great as something like a Home Depot that's been just marking time going into their earnings. We can take a look at one other company that is going to be reporting this week. I talked about this being more of a consumer retail related type of period for stocks that are reporting. This is Shake Shack. They're in the restaurant space. You can see that they were a big winner last year. This gap up was on earnings. They came in well above estimates. The stock gapped up higher, but more recently they've been languishing. And so what I wanted to point out with this one, we're looking at a daily price chart. And while the estimates for this year are really only going to be single digit, and we can see that the stock has not really been participating in this nice rally that we've seen in the broader markets. The stock is still below that 200-day simple moving average. So while it has begun to potentially reverse this downtrend, we're not out of the woods yet. So it will be very, very interesting. They are due to report after the close today to see if they are able to break up above that 200-day simple moving average and join the party in essence. But this at this juncture is not an attractive stock. Again, we're going to see how it is going to perform after the close. So let's go ahead and move on. I talked about the Chinese market, and so what I'm going to do here is go ahead and start by looking at the overall market. This is MCHI. It's an ETF, and this tracks the broader equity markets in China. It's one of the bigger, more liquid ETFs for China. So we can see that China actually went into a bear market down here. They did have this period, an attempt at reversal that failed, but more recently they've been steadily potentially reversing. The Chinese government is putting systems into place to potentially combat the bear market, but the biggest push down here has been the trade war fears. That really has been dampening the market's progression. But more recently, and particularly last week in anticipation, we can see that this broader ETF has gapped up above that 200-day simple moving average. So we get a sense that the potential turnaround in the Chinese markets is potentially has more legs and more strength. The RSI is positive. We're having a nice positive crossover in the MACD. So let's go ahead and drill down. What I've done is gone ahead and taken a look at some of the underlying stocks that look potentially quite positive here. What I did want to point out to you is this turnaround that we're seeing. A lot of Chinese stocks are still down and out trying to reverse. So I'm going to key in on those stocks that have gone up above these simple moving averages and are in a better position to potentially benefit from the possible turnaround in the Chinese markets. This first stock that we are looking at, the ticker symbol is ZTO. And the stock is a transportation logistics company, ZTO Express. And it's a rather large $15 billion market cap. And so what I did want to point out to you here is this turnaround. This realistically, the stock did not get hit as much with the broader markets. That's a very bullish sign, so that when the market pressures lift, these stocks will potentially become your leadership names. And it makes sense, certainly. Let's take a look at another transportation logistics. These are the companies that are going to be benefiting from an improvement in the economy. Now, this is BEST. We can see that this stock really is not as well positioned. This is a $2 billion smaller stock, so we are still below while we are potentially reversing. It's trading at a $6. This 7.5, 200, where the 200-day simple moving average is positioned, is your next possible area of upside resistance. Let's take a look. This is going to be the next stock is HMI. They're a clothing manufacturer. Look at this. They really did not go down with the broader markets, gapping up 6% today. This is certainly one of the better performers within the Chinese markets. We can look at a more subdued company, LFC, and that is China Life. And we can see it's not really that the volume, and actually you can see that the stock is not traded that actively. Just down here, we can see it does not get a lot in the way of daily. So let's take a look at BABA. This is Alibaba, well known, and this stock is actually gapping up as well today, but we can see how this stock is in a position to continue to benefit from a downtrend reversal in the broader markets. It's broken up above that 200-day simple moving average, RSI, in a positive fashion, as is your MACD. And I have time for just one last ticker symbol, and we will leave it at that. This is CYOU, an ETF, and that's it for this week. For those of you trading, best of luck.